Welcome back to Crypto Hustle 101. In this video, I'm going to go over the difference between potential and confirmed divergence. I'll also introduce the concept I came up with for converting Fibonacci price levels into time targets. Divergence happens when price is going in the opposite direction of momentum. In this example here, it looks like the asset is going to keep pushing higher. But if you look at the MACD, you can see that the histogram is going lower. Price is making higher highs, while the MACD is making lower highs, showing potential bearish divergence. That divergence is confirmed once price breaks this level here. This gives us a heads up that the asset is weaker than price action will lead you to believe. First showing a bearish M structure in the indicator, then showing a bearish M structure in price action up top, which confirms once it breaks here and continues to dump down further. And as it moves down in price, we start to see bullish divergence begin to form. When identifying bullish divergence, the asset's going to be making lower lows in price, but showing higher lows in your indicator. You can see an example of that here, where price is moving down, making lower lows, while on the MACD histogram, we can see it's making higher lows, showing potential bullish divergence. Now let's use the drawing tool and show exactly where it confirms. Alright, come back over here, zoom in. Alright, we start to come down, come back up, go down, make a higher low, and once we break that level right here, it becomes confirmed divergence. Let's go ahead and mark it right here. Alright, and once it breaks that level, you can see the price continues to push up higher. Now that was two clear-cut examples of bullish and bearish divergence. But keep in mind, it's not always going to be this easy to identify divergence. Let's go to the next example. Alright, ZRX is making higher highs in price, while we go down to the MACD, it's making lower highs, forming potential bearish divergence, which does not confirm, because if you look down here in the histogram, it actually does not break this level here. But when it comes back up, it makes another lower high, forming a double divergence. And then once it comes back down, this time it confirms. And now we have a confirmed double bearish divergence. Now once price begins to push down, the next step I would take in my process is to draw fib retracement levels. Let's go ahead and come over to the fib retracement tool over here in the menu. Now I used to draw my fib retracement levels the conventional way. That's from going from this swing high down to this swing low. As price begins to retrace, it's not respecting the fib levels as it works its way down. You can see here it breaks through the 618, comes down, breaks through the 786, before finding support on the 886, making a W, and then pushing to the upside for new highs. Now the new way that I draw my retracement levels, I've found to be more accurate at finding support and resistance levels. Well, let's go ahead and hide this. Now in the interest of time, I've already pre-scaled this chart using my quick scaling method I've talked about in previous videos. I based it off of this first impulse move up. And let's go over to the menu and select the circle tool right here, come back. And you want to go from this swing high and you want to come down to where the uptrend started right here. Next, you want to select your fib retracement tool, and you want to go from the top here and come down and line it up with the bottom of the circle and come over here. Now we can see that price is respecting each fib level as it works its way down. After price breaks the 50% level, it bounces off the 618, gets rejected at the 50% level, breaks support, comes down, and reverses off the 0.786 and circle support. Comes back up, bounces off the 50, gets rejected, comes back down, makes a W, and then pushes his way up. Gets rejected here, last line of resistance. And once it reaches a time and price equality here at the side of the circle, it goes parabolic and pushes up till it meets resistance at the top of the circle here. Now I was able to forecast this time and price equality by converting this impulse move here and turning that into a circle. Now I can find more instances of time and price equality by converting these Fibonacci levels that price was respecting and turn that into a circle as well. You do that like this. Come over here to the menu, select your circle tool, and you want to go from this top here and swing it down until it reaches the 0.618. Now once price reaches this time and price equality at the side of this circle, it stops coming down and then begins to reverse and push to the upside. We can do the same thing again. Go ahead and bring the circle down to the 0.786 level. All right, and you go to the side and you can see once ZRX reached this time and price equality on the side of the circle, it stopped going down, reversed, went up, got resistance, hit another time price equality at this side, and then went parabolic again. Price reverses when time and price are equal. Now let's see if we can find more reasons to enter a trade. Are we in a good location? All right, if we look down at our fib retracement, yes, we're inside of a long zone, bouncing off support, so the location is good. We have price making lower lows, while the MACD is making higher lows. So we got bullish divergence, which confirms once it broke this level here. And we have price action making a W, which gives us bullish market structure. Now all those things together give us more than enough reasons to enter a long trade at this point. So once we decide to enter a trade, we're going to have to determine where do we exit the trade at. We could set it for the maximum resistance at the top of the circle, or we could go and use our Feigenbaum chaos extensions and see what take profit targets we can get from that. So we go here from here, come on down, set it up, and then you want to go into the properties, use our preset, hit OK. All right, so as you can see, if we look, the first target we see is the 2.618 right here, and that's where price actually stopped right in its tracks, came down, and then found resistance at the 4.669. All right, so that's going to be it for this video. Hopefully you guys got something from it. See you next time.